Yeah, we'll just go for it.
Okie dokie, okie dokie. All right, well, here we are. We're live on YouTube. We're live on our webinar. And I'm excited. We're here for another Thinking Outside the Bank. Now, usually each week we like to discuss different tips and strategies for being able to find new lines of credit. We also want to talk about how to build business credit. But today, instead of talking about what you should do, we're really going to talk about what you shouldn't do, right? So we're talking about business credit shortcuts. And we get this from time to time from several of our clients. And it's we're going to not only just it's not just us that we're going to show you in this PowerPoint why you shouldn't do it, but we're going to hear from the FBI. We're going to hear from the Justice Department. We're going to hear from other sources, credible sources, why you shouldn't use these shortcuts.
Excellent. I'm excited.
So let's jump right on in. So, of course, my name is Joseph Smith, and this is my business partner, Mr. Ray Fleming. We are the Wise Guys in Ties. Wise in the ways of helping you start, build, and grow your business. Wise in the ways of helping you learn how to increase your financial output, right? Through increased streams of income, tax write-offs. We have a lot of advanced financial strategies that we help each and every one of our clients learn how to use and implement. And our contact information is there on the screen. Before we get started, because we are talking about some legal stuff today, we need to put a special disclaimer on this. And I need to let you know that I'm not a licensed attorney, accountant, financial advisor, broker, or any other licensed individual. And even if I have a license, I'm not acting in that capacity. Therefore, I will not discuss or provide any specific counsel or advice or instruction that would apply to specific individuals. This presentation is intended to be general information only. Wise Guys in Ties LLC recommends that you engage in the services of competent legal professionals when making decisions that have a legal impact, especially financial decisions. With that said, let's move right on. So there are no shortcuts in life. Would you agree with that?
There are shortcuts, but they usually end up taking a lot longer than you expect.
That's true. Well, the same is true in building business credit. Now, here's the top 3 areas that we find a lot of our clients that have kind of messed up and they didn't realize it, is buying trade lines, using CPNs, or buying shelf corporations. And these shortcuts really lead to disastrous outcomes when it comes to building business credit. They never deliver what they promise, right? So for those who don't understand, a CPN, it's a credit privacy number. So we'll talk more about that later, but buying trade lines is by far and away the #1 thing that most of our clients try to do to get ahead. Would you agree?
I absolutely agree. See, these things could have worked before because there was the lack of information, the accessible information. But nowadays, we're in the information highway.
It's called the internet, right?
Yeah. You just can't get away with the things that used to work.
All right, well, let's jump right on in. I got a lot of stuff to cover with you. So what do we mean by buying business trade lines? Legitimate business trade lines are lines of credit that vendors extend to businesses. The business gets goods or services and agrees to pay for them at a later date. Trade lines can help business build credit since the loans are frequent and the turnaround is quick. They can rapidly build a positive credit experience. This is opposed to the bank line of credit. Many companies online promise to sell seasoned trade lines, right? Okay, so a business with poor or little credit can, according to these people selling trade lines, can for several hundreds or seven thousands of dollars piggyback on the accounts of someone else who has established excellent credit. New business owners seem more creditworthy than they really are. Now, I'd just ask you right off the bat, does that sound ethical?
It sounds like you're definitely trying to cut some corners, and I would not go this route because it doesn't sound ethical.
Well, but here's the thing, though, for a lot of people and why they do this is because this is totally legal and legitimate on the personal credit consumer side. Your mom or your dad or a relative can make you an authorized user on their account. And that's a legitimate way to try to build your personal credit.
Right.
But in the business world, it's not looked at the same way. That's not looked at as a legitimate way to build your business credit. So, and a lot of times people just take what they think they know and understand from the personal credit side and then try to apply it to the business credit side, but 2 totally different animals. One, on the FICO side, FICO, it's part of their scoring model. They will actually, you get a little bump or a little boost if you're on your parents' credit card as an authorized user.
Yes.
But not so on the business credit side. And we'll discuss more of that. So what does it mean to piggyback a trade line? Well, a company offering piggybacking maintains a network of creditworthy or cardholders or vendors that are ready to add strangers to their accounts for authorized users for a fee. So what this means is somebody wants to sell you a buy in a trade line. That means they're going to sell you an authorized user on their account. That doesn't mean you get access to the account. You can't use it. You can't pay for anything. You just become an authorized user, hoping that the credit experience will thus transfer to your business credit profile. The third party looking to increase their credit score contacts the company. The company then offers a selected trade line to the client and charges, well, we've seen anywhere from $500 to $2,000, but I mean, it can be way more in some cases. Now, the company submits the order to the cardholder. The credit-worthy borrower adds the third party as an authorized user on the line of credit, but he or she does not actually provide the third party with materials, such as a credit card or account number, etc., to permit the third party to make charges against the account. So the authorized user never actually uses credit. Once the trade line reports, the company pays the cardholder anywhere from $50 to $250 for the authorized user, and the company retains the remaining funds as revenue. So can you not see, like right off the bat, you're trying to build credit, establish credit, but you're not actually using any credit. That should be like a red flag right there.
It definitely is.
So, but here's another thing, and you brought it up, because we're in the age of information. I mean, we're talking about Dun & Bradstreet, business Experian, Equifax small business. We're talking about banks, Chase Bank, Wells Fargo, Capital One, all these banks. They employ legions of people to sort out and find these trade lines and to find the CPNs and to find all of these shelf corps. And there's people whose sole job is to find it and shut it down. And somehow somebody thinks that you're going to somehow backdoor and trick these multi-billion-dollar organizations.
I think it's important for folks to understand that the majority of revenue is spent on preventing fraud.
That's right. That's why fees are so high. So how does piggybacking benefit anyone? Well, the benefit to the third party is an improvement in your credit rating. That's what they're promising you, right? Why would anybody choose to spend $500 to $2,000 to do this? Because they're promising you to very quickly build your business credit. Now, it shows that they have already been approved for other higher limits and revolving accounts. And so in theory, this is supposed to make you credit worthy for higher limit accounts. Many companies claim to be able to secure $100,000 to up to $250,000 in credit lines once these accounts are reporting. This is dishonest. Okay. The FBI has found that trade line companies can actually be fake, and the primary cardholder had the identity stolen in a lot of these scams. Mm-hmm. So you're buying into this, and you don't even know if the person that you're getting the authorized user account is actually the person that's authorized to even give you the account. And so, again, we're not practicing law here, but you start getting into the territory where you're committing felonies and you don't even realize it.
Right. And see, a lot of these things can go unnoticed because some of these cards don't actually show up on the personal side. And so that's why obviously the FBI has to get involved in this, because they could go unnoticed on the actual person that had their identity stolen for years.
And I can't stress it enough. Do you really believe that a Bank of America or a Chase Bank is going to look at this business that has actually done no credit transactions and see this huge credit profile and say, sure, we'll give you $500,000? I mean, that's where the disconnect is. We want to believe that you can somehow shortcut or short circuit the system here, and it never works. It's like,
if this worked, we would be telling you to do it.
Absolutely. Just keep in mind, every time you do one of these things, it's like Wile E. Coyote going after the Roadrunner. It never works out for Wile E. Coyote. It seems like it's a good plan. It looks like it's going to work, and then it comes crashing back down on you big time. So personal credit is different than business credit. We already made that point, but consumer trade lines as an authorized user are considered legitimate. A person with poor credit can use this strategy legally. Hence, if you know somebody with great credit, ask if you can become an authorized user on their card. You never need to use the card, yet it can still help raise your personal credit score, but never your business credit scores. It never works that way. Now, actually, they've made a lot of changes in recent FICOs, like FICO 9 and stuff like that, where they only wanted you to use family members. However, it's proving difficult for FICO to figure out and police who's a family member, right? It's not as simple as, oh, you share the same last name, because family members, so I don't think that they quite have that all ironed down. But ideally, the goal behind it in the FICO system was for you to use a family member's credit to help, to give you a little boost or help. So what does the FBI have to say? Don't listen to what Joseph or Ray says. What does the FBI have to say? When commenting on a 2013 fraud ring bust, a second kind of trade line is, quote, authorized user trade line, where a credit card holder adds another so-called, quote, authorized user to the credit card account. This raises the credit score of the authorized user, who inherits some of the primary user's credit history. Some defendants created and sold fake lines of credit for false identities made up by other defendants. These fraudulent primary trade lines were then used to increase the credit limits on fraud cards so that the defendants could reap even larger profits. Defendants used the authorized user trade lines to create new identities. All right, this is just from the FBI archives. This happens all the time. Every year, there's 1, 2, 3, these always show up in the news, right? Now, the ringleader of this scam went to prison for 80 months, but think about this. We're not practicing law here, but if he was convicted of identity theft and then sold you a card that you used, what would you then be guilty of?
Identity theft.
Right. Unknowingly, unwittingly, but still, you would be participating in identity theft. So keep that in mind. So now, what does FICO have to say? A shadier version of piggybacking has been promoted by some CROs, credit repair, companies, who offer to rent to use their credit challenge customers the trade lines of established account holders in an effort to boost their customers' credit profile and scores. I mean, it's like you have FICO saying shady, right? That's pretty big right there. What does Equifax have to say? Authorized user abuse occurs when low-risk primary card owners rent their trade lines with extensive credit histories, high credit card limits and solid repayment profiles to others, most times knowingly to fraudsters. All right, so it's not just us saying it. What is NAV? Now, NAV, they're also a credit reporting agency. Rarely does this turn out to be what it seems. The established credit lines may not be the type of funding the new business needs, and if lenders catch whiff of the new business owner trying to take advantage of this scheme, they can quickly shut those accounts down. It's usually shady, says the NAV, the ex-CEO Levi King. But here we have, these are the industry leaders. This is the credit reporting bureaus. This is what they're telling us. So these are unethical methods. Lenders and credit reporting agencies are well aware of every unethical method out there. I mean, they make billions of dollars every year selling high quality information.
So yes,
they know what to look for and will always be looking. When they see a change in company ownership or a new authorized user on a card, they will begin to dig deeper. All right. So what does that mean? D&B flagging. This is, you don't want this to happen. Once you get flagged by D&B, it's pretty much game over. Okay. There's really no way out of it. I mean, you can, if you legitimately didn't do anything wrong and there's a mistake, but if you did something wrong and you got flagged by D&B, it's loss of business credit, right? No chance to get out. So sooner or later, D&B will figure out that you bought a trade line. And if the trade line sales company inquires into your credit report, D&B is tipped off. Now think about that. Anybody can check your credit profile.
Right.
So we've actually had a client, Christine, who had one of these companies check her credit and then she got flagged.
Ooh,
But
yep.
she was able to say she never authorized it. She didn't ask. She didn't buy anything. She didn't even know who the company was. It was an uphill battle. It took her several months, but she was able to get unflagged. So, I mean, there is hope if you got, unintentionally flagged, right?
Right.
Because you didn't do anything wrong. There's usually a way out, right? But if you did try to buy something from one of these trade lines, they're going to check your credit profile, which automatically alerts D&B, right? Anytime you buy a trade line, the seller will check your credit. They want to be sure they get paid. Shutting down trade lines is just the start. D&B will red flag your entire profile, both new and old trade line sales. You might have legitimate trades, but D&B will flag them anyway. You will lose whatever time you think you gained. Your profile is red flagged. Plus, you're out of the cost of the trade lines. There is no statute of limitations on this. It's not like it's ruled by the court system. There's no law, right? So if you bought trade lines 50 years ago and D&B just found out today, I mean, what does this mean? It means like you have this D&B credit profile. You've got your DUNS number, you've got your Paydex score, and then one day you're like, wait a minute, there's nothing reporting anymore. I don't even see my business at all. You've been red flagged. You've been literally shut down. Means anybody that goes to pull your credit profile sees nothing on you.
And unfortunately, there's a lot of folks out there that, unknowingly had this happen to them. It's sad to see, but it happens. And you just have to start from square one.
That's the painful part, especially if you put the time and money into building a legitimate profile, but you mixed in one or two trade lines that you paid for.
Mm-hmm.
Sad. So moving on. So that was trade lines. Let's talk about CPNs, the credit privacy number. A credit privacy number or a credit profile number, CPN or SCN or secondary credit number is a 9-digit ID, just like a social security number is a 9-digit number. It can be used as an identification number for people when needing extreme privacy. Extreme privacy, right? So like a social security number, a person can only have one CPN. It's used as a unique identifier for financial transactions and lets lenders and credit reporting agencies keep an eye on your borrowing history. A CPN can help you keep your finances safe and hidden from the public's eyes. It's popular amongst elected officials, celebrities, and people in witness protection programs who need some extra privacy. So there's a lot of people out there that want to sell you a CPN. Now, what do you think is the thought process? Why is that so popular? Why do people go for that as an option?
Well, because they kind of in one aspect they feel like it's erasing what the damage they've already done, whereas in reality the goal is to help protect your identity instead of actually hiding from your past.
Exactly. So the way it's typically sold is like, oh, look, you've got poor credit, you've got a bankruptcy, a foreclosure on your record. Look, here's what you can do. You can buy a CPN, you can use this, build your credit on the CPN, and thus erase all your poor past credit. But it doesn't work that way. It doesn't. Folks, who legitimately uses CPNs? Celebrities use them because the media can use their social security numbers to track what they are buying and where they are and track their credit cards. Congress holds special privileges in law, so their privacy needs to be protected. Witnesses under protection can be located if they use their true social security number for transactions. This is why there are credit privacy, the CPN exists, right, for those specific purposes. So when do you need to use your social security number, right? So, and this is important because if somebody's telling you you can use a CPN for certain things, what can you use it for, right? Well, first of all, you can't use it for anything that you need to use your social security for.
Right.
So what do you need to use your social security for? You're only required by law to disclose your social security number to the IRS and your employer when registering your motor vehicle, when buying a firearm, and when applying or obtaining a federally insured loan like FHA. Now, you get asked for your social security number all the time for other things.
Doesn't mean it's required.
Exactly. But here's the thing that people mess up on all the time. When somebody asks for your social security number, people will put in all zeros, or they'll put in all 1111s, or they might be tempted to put in a CPN. And
that's illegal.
That is. Not that you're practicing law. You can't use a CPN for many things, including IRS documents or for an employer when registering a vehicle or applying for a government loan. The theory is that if you give lenders a different 9-digit number, they won't be able to find your legitimate credit reports. If they can't find your true poor credit reports, then they'll approve your application. Then they'll start reporting account information to the credit reporting agencies using the CPN. This establishes a new credit report not connected to your legitimate credit profile. Okay, so that's what people think is going to happen. But what about using a CPN instead of your social security number? You can't legally misrepresent your social security number. There's a law against that. You just can't do it. You cannot use it in the form field which asks for a social security number. So any loan application, anything where it asks for the social security number, you put anything other than your social security number there, you're actually breaking one of a federal law. Anti-money laundering laws require supplying your social security number when getting business loans. If you place a CPN or other fake 9-digit number in the social security number field, you've just committed a federal crime. This is considered to be fraud. And man,
that does not sound like it's a good idea.
No, it is not. Per the Federal Trade Commission, right? Lying on a credit application and misrepresenting your social security number are both federal crimes, right? So you could be faced with and also charged with identity theft, because you want to know where a lot of these CPNs come from? They're like old people or people who have died or little kids, right? So they look like legitimate numbers, but you're actually committing identity theft. So you could be committing 3 felonies, right? All in one time.
Oh boy.
So how do you get a CPN? We'll tell you, it's not really difficult. Anybody can get a CPN for free. Don't be fooled by anyone who's actually selling a CPN, especially if they claim it's already, quote, established. Often the CPN they're selling, I just said, was a real person's social security number from a child or somebody who's deceased. You can't really get a new identity, right? Once you start establishing information under your social security number, that's it. You're stuck with that. But here's what you need to understand. Watch for these warning signs. The company tells you that it's legal to apply for credit with a CPN and not your social security number.
Red flag.
They tell you that you can use your EIN to apply for personal credit. You can't do that. And they demand that you pay for the CPN. They promise you'll no longer be associated with your old credit accounts. All of those are false.
Yikes.
What does the Federal Trade Commission have to say about this? Companies promising a, quote, new credit identity say that they can help you hide bad credit history or bankruptcy for a fee. If you pay them, these companies will provide you with a 9-digit number that looks like a social security number. They may call it a CPN, a credit profile number, or a credit privacy number. The credit repair companies may tell you to apply for credit using the CPN rather than your own social security number. And they may lie and tell you that the process is legal, but it's a scam, right? That's coming from the Federal Trade Commission. It's a scam. These companies may be selling stolen social security numbers, often those taken from children. By using a stolen number as your own, the con artist will have involved you in identity theft. If you follow a credit repair company's advice and commit fraud, you might find yourself in legal trouble. It's a federal crime to lie on a credit or loan application, misrepresent your social security number, and commit identity theft, right? The bottom line is that if you use the number they sell you, you could face fines or time in prison. That doesn't sound like any fun. So what does the Social Security Administration say? You may be prosecuted as a criminal for fraud if you knowingly furnish false information as your own identity in connection with the establishment and maintenance of Social Security records. The penalty upon conviction for violation of the penal provisions of the Social Security Act or one of the related provisions of the Federal Criminal Code may be a fine, imprisonment, or both. The penalty ranges from a fine of not more than $500, imprisonment of not more than a year or both, to a fine not more than $10,000, and imprisonment of not more than 15 years or both. How would you like to lose 15 years of your life
Man.
because you used a CPN?
Woo.
My goodness. So what does the Department of Justice say? A CPN is a 9-digit number that some credit repair agencies claim can be used as a replacement for your social security number in credit and loan applications. Falsely stating in a credit or loan application that a CPN is a social security number risks violating federal law. What does the Better Business Bureau say? In the US, some scam companies will ask you to apply for an employer identification number instead of using your social security number. Misrepresenting your social security number is a crime. So, my goodness, I think we've covered
Well,
it.
there's just so much there, and it's one of those things that if these companies actually spent the time to show you how to do it legitimately, it takes a little bit longer, but it's totally doable. You can build business credit on a business. You can organically start to repair your credit. It just takes time implementing a credit banking strategy, something like that.
Absolutely. The last thing we're going to cover is the shelf corporation, because a lot of people think that this is a really good strategy. A shelf corporation is a corporation on paper only, meaning it's not really generating any revenue. It doesn't have any assets. It doesn't have a bank account. It was administratively formed and then put on the shelf for several years to age. The term shelf or aged only means the company has already been filed. It is sitting on the shelf just waiting to be purchased. Shelf corporations also go by other names such as aged corporations, seasoned shelf corporations, or off-the-shelf companies. Shell corporations are commonly different entities in scope and in information. Shell corporations often have no significant assets or operational structure. So have shelf corporations ever been legitimate, and can they be legitimate now? Well, back before the age of the internet, right, it used to be very difficult to start a company. It did take time, right? The internet has streamlined it so that you can get a business started in like...
Everything's done online and it's processed real quick.
It could get done in a day or a couple of days.
Right.
But man, back then it was so much easier. Before the age of the internet, which not many people even are aware of, but it could literally take weeks or months just to get a company set up the right way. This was a legitimate way. If you were like ready to get going right now, buy a shelf corporation. You already had everything already taken care of. But
and before that easy accessible data is, they couldn't tell if it was old, or they couldn't tell how long it had been sitting there doing nothing.
Right, but I mean, the reason why it was legitimate was you were going to take the shelf corporation and then do something with it. So what people today want is they want to get credit for all this time in business. That doesn't work. Now, selling them as a way to get around the credit guidelines is fairly new, but they are legal and have some legitimate purposes. In theory, they can be used by someone who may not otherwise qualify for a bank loan, line of credit, or a government contract. This is because they or existing companies do not have required credit scores or 2 to 5 years in business as requirements. So what does a shelf corporation do? Absolutely nothing. It doesn't engage in any real business. Most have been 100% inactive with no income, assets, bank accounts, operations, or any activity of any kind. All right. Well, I mean, you can legitimately buy a business.
Oh yeah.
So a business that's in full operation that has assets, has bank accounts, has business credit. You can buy those things. Now, there's the right way and the wrong way to do this. See, when you buy a shelf corporation, here's the thing that a lot of people don't realize is you're buying the liability too. When you buy a shelf corporation, if there's tax liens against it, there's lawsuits, whatever, you assume all that responsibility. The person who sold it to you is got their get out of jail free card.
And I also think about just from the IRS standpoint, when you start a business, you now have this grace period to become profitable, and where you are still in the startup phase. If you buy something that's 5 years in and it hasn't made any money, IRS is going to look at you like it's a hobby, and they're gonna start questioning some tax returns and things like that.
Absolutely. So, I mean, it's important, when people go to buy business, there's a right way and a wrong way to do that. We'll probably come up with another video about that in the future. But most of the time, when they buy businesses, they don't, especially if the business has troubles, they don't buy the business, they buy the business's assets. And they reform and restructure under a different name. But there's a legitimate way to buy a business but a business that has 100% inactivity, that's automatically going to be flagged as a shelf corp. So what does the FDIC say? The FDIC says that shell and shelf companies can be created domestically or in a foreign country. Shell and shelf companies are often formed by individuals and businesses to conduct legitimate transactions. However, they can and have been used as vehicles for common financial crime schemes such as money laundering, fraudulent loans, fraudulent purchases. By virtue of the ease of formation and the absence of ownership disclosure requirements, shell and shelf companies are an attractive vehicle for those who are seeking to conduct illicit activity. So it just automatically gets you red flagged.
And you got to think about who actually started that business. Do you want to be associating with somebody that started one of these and you don't even know?
I know. Exactly. Now, what does the Financial Crime Enforcement Network say? The majority of shell companies sold to foreign interests appear to differ significantly from those used in reverse acquisitions. For example, in that they appeared to have been set up solely for the purchase and were not aged or put on the shelf after some period of actual operation, though they too may not be used immediately. This type of shell appears to have few legitimate uses and can fairly easily be employed to disguise ownership or movement of assets or to facilitate illicit activity. The role of domestic shell companies in financial crime and money laundering from 2006. What does Dun & Bradstreet have to say? This is probably the best. I mean, this is the definitive, right? Because why would you do it? You would do it only for the sole purpose of getting Dun & Bradstreet to recognize your legitimacy. So what does Dun & Bradstreet have to say about it? Thieves can purchase a 40-year-old corporate charter off the shelf, making them look well-established and low risk. Creating and purchasing these aged shelf corporations, which adds creditor confidence and often drives automated decisioning rules, is legal. Using them with the intent for fraudulent purposes is not. D&B has a history of red flagging all shelf corporations. When instructing on how to read their reports, D&B says users get a unique view into the ownership and management changes of a company since the date it first began operations. Each time management or ownership change occurs, the report receives a new present control date. Anytime a change of control happens in a business, it's like becoming a brand new business. If a company started in 1900 but underwent a control change 2 years ago, quite frankly, it's a 2-year-old business. This is coming from Dun & Bradstreet, wow. Right? Buying a shelf corporation won't do anyone any good. All right? I mean, that should be
that's that last part there, because I had looked into shelf corporations a few years ago because I wanted to accelerate that credit. Before, we really understood the right way to build credit, that was one of those things I had looked at, and it was very appealing. But then I didn't quite realize that about the Dun & Bradstreet, basically just resetting it. Similar to if you don't have a bank account set up for your business and you've been in business 10 years, well, welcome to starting your business when you start your business bank account.
That's absolutely right. So what does Experian have to say? Because Dun & Bradstreet isn't the only one, right? Experian says creating companies that impersonate established companies in order to deceive creditors or suppliers is a way that criminals are using shelf companies for fraudulent use. Doesn't sound like Experian likes that either. What will the credit reporting agencies and lenders do? Well, we already saw what Dun & Bradstreet's going to do, but if a credit reporting agency learns a company is under new management, they will list it on their reports. This effectively re-ages the company. Many lenders now look at a bank account start date as the corporation start date because most shelf companies don't come with established bank accounts. Some have actual credit problems, making it harder to get funded, not easier. Most lenders know what to look for. They can see if it's a shelf corporation. Things like a business bank rating can tip them off. Public records also show the change in ownership. This raises red flags. So what are the other problems with shelf corporations? Well, some shelf corporations might charge you anywhere from $500 to thousands of dollars. And some companies charge $20,000 or more. The cost depends on how long the company's been open. If you buy the shelf corporation, you are now responsible for anything bad which may have happened with the company since its incorporation date. These include back taxes, financial audits, lawsuits, judgments. You want to take all that on with
No
the Shelf
way,
Corp?
Jose.
No. I mean, that's why when you see businesses buying other businesses, why does the merger or why does the acquisition take so long? Because the lawyers are trying to make sure I don't want to pay any back taxes.
Due diligence.
All right, I don't want any of this coming back to bite me. So let's recap. We know that there's a fast, legal, and ethical way to build business credit. And you will probably hear about some less than ethical ways to build business credit. Experts all say buying business trade lines, CPNs, and shelf corporations won't work. Don't fall for these scams. Buying trade lines is unnecessary. CPNs can be stolen, and using one when you must use your social security number is a federal crime. For shelf corps, banks will age the company from the bank account opening date, not the corporation's creation date. So if you're going to spend money, why not just spend the money to build your business credit correctly? You should be working with us, the Wise Guys and Ties. On your screen below, you can just contact us, schedule a 30-minute free consultation. But what's important is, I mean, when you build business credit the right way, it only takes 6 to 12 months.
Yep.
A lot of our clients get it done in like 9 months or less. And so don't wait. If you've got all that energy and money, let's put it into building your business credit the right way. And if you already are established with your business and you're looking for funding, you need to look no further than Wise Guys and Ties, because we can help you get all the funding that you need. Working with us and our loan officers will do a business blueprint that'll help you see from here where you're at today to getting millions of dollars in SBA loans and the different types of funds that you need to grow your business to the level that you want. Our goal is that we're going to be your one-stop shop to find all the business funding that you need. So, folks, I want to thank you so much for spending your lunch hour with us here at Thinking Outside the Bank with the Wise Guys and Ties. My name is Joseph Smith. This is Ray Fleming. And on behalf of us and the Wise Guys and Ties, we want to say good night and God bless.